All right, last week we saw crash 300 giving us a corrective structures here. Okay, these are corrective structures, okay? So after this corrective structure, we saw the dip down, okay? Yesterday and day before yesterday, something like this pumped out, okay? But the market broke this counter trend line and it did corrective structure, so another down, okay? So here, we expect this market to give us a clear corrective structure for another down, but that never happens, okay? What we see is that the market keep on correcting and breaking downward. So we saw the market as a form of a running flat pattern and continue down. So at the end, we discovered that this market, for this down that happens here, this market obviously has started showing that down. So yesterday, the trade we have after this consolidation, discovered that this market is willing to drop down from here after here corrective structure. Did a retracement on this engulfing, push that, keep on pushing down until we finally get the market here. So what next are we expecting? From what we are seeing, obviously the market has broken this counter trend line, very obvious. So, and we might expect another up push, okay, for the market to push up. And if this market is willing to reverse upward full time, that means we can see that from here, connecting this will help us to know when the market will go up. So if the markets after pushing up break this, then we'll be expecting it to go up big time. Or if not, there is a tendency that this market can do a correct structure and still go more down. But for today and for the from the structure we are seeing now, we may expect another up push. Okay, for this first up, after this down, let there be another up push from the market so that we can see three waves, okay, in this area. And if possible, we'll get the three waves. Look at this area. We have an engulfing candle at this area. We have here, okay, so we can put it on 30 minutes to search out the one that is very, very unique that we can use to go down. Okay, 30 minutes gave us this, but all of them has been tested. This one has also been tested. So we check 1 hour. You know, anytime I want to get a zone with engulfing candle, I go for either 30 minutes. If I didn't see it on 15 minutes, I go 30 minutes or go 1 hour. Okay, so for now, we see that none of them is that's actually unique. So we'll stick on our 15 minutes candlestick, okay, time frame. So what next are we expecting to see here? There is a neckline here with an engulfing candle. There's another one here, but obviously this one has been tested, so we're not dealing with this one right now. Okay, the one we could be dealing with is this one, this hard. So it depends on the wave the market used to get to this level. Okay, we use the third wave and the exhausted wave to get to this level, then we'll be expecting a reversal. But that reversal will be determined if the market will go down with speed. Okay, let's say we see something like this, okay, into this place. We know that this is three waves that entered here. So we need to know how fast that down will go. If that down is fast, obviously it's going more down. Okay, but if it's not fast, if it starts to give us a consolidation down move, okay, we might obviously perhaps might see this market giving us another three-wave structure as a down. Okay, another three-wave structure as a down. So this market will now be impulse. Okay, normal is a logical inertial impulse, and another up will now come up. So you see how the market can possibly be moved up in a higher dimension. And at that level, if the market wants to use speed again to go, the market can use speed and do what? Push down. But if not, I'm just teaching us the logic. If not, you can still see market do small down like this. Okay, that is still logic for the market and give you corrective structure like this. It can even give you a corrective structure like this. Then you push another down. And if you see something like this, I've broken this counter trend line, so it becomes what? This will become the impulse. This will become the correction. another impulse is coming, which higher is coming. So you see that the market is still ascending upward. And the moment you break this high, the case done the change that the market wants to go high. So obviously you know that you will see a corrective structure here for another bigger high. So this can be the stages market can reveal itself and continue pushing up. But remember where we are right now. Remember where we are right now. This is where we are. Okay. I draw the counter trend line from here to here. So this up is expected to go break this high, get us to this level. If you do that with three-wave structure, we will target a sell at this place. So you can put a pending order here and target your sell at this place, or you can wait to see the waves you used to enter there. Then you can target your sell for a down. That down can be a corrective structure or it can be an impulse. Okay. All right. So that's why I'm saying that more down hopefully might come is because if you do 2 by 2, there's what we call 2 by 2. Okay. I think I've taught it here before, but let me just say there's what we call 2 by 2. Let me just give that this one. This is what we call 2 by 2. When the first wave, the first impulsive wave went out, if you're expecting the second impulsive wave, make sure you put it where it starts. The second one starts. So if you start, you measure this one, just bring the arrow and put it here. It will help you to know the level where this down should go. It will help you to know the level where the second down should go. That is what we call 2 by 2. So if you measure it, that will help you to know that there should be more down. That is why I say more down may come because of the 2 by 2. So for this down, so I measure this wave down and put it at this high. So obviously, I'm expecting another down if you want to complete 2 by 2. That is what I call 2 by 2. But it's not all the time that the market do 2 by 2. Okay. But sometimes, most times, it always go above 2 by 2. Okay. Instead of not reaching the 2 by 2, most times you go above 2 by 2. You go above 2 by 2 more than the time that it will not reach 2 by 2. So anytime you see the first impulse, for example, this one, check out this first impulse. The second impulse go way far above it. Okay, you see the second impulse, it go way far above it. Okay, anytime you see first impulse, just be checking that. You see that the market normally do the thing. Anytime you see first impulse, let me use this one as an example. If we check this up, first impulse, put it down here. This one, you go a little bit above it. Okay, anytime you see first impulse, you will see them. It always go a little way above them. The same thing with this one. You see the first impulse. Anytime you see first impulse, just be watching it. They go above it. If you take this one as the first impulse, put it here. If you measure it and put it here, that is 2 by 2. You always go. It will help you to know the next level the market needs to touch. Okay, that is 2 by 2. So if I measure this 2 by 2, you see that they have not landed. So obviously it may still go down. Okay, it may still go down, but let's see it first at this level. Then start the selling. If you use speed to be selling, fine. You just maintain it, do break even, allow it to do the last drop so that it can get to the 2 by 2 level. But if not, remember it's not all the time 100%. So if not, we can still continue to go up and do a significant corrective structure, okay, before going back down. Okay, so that is our expectation on crash 300. This is our target to sell. Okay, we're not selling now. This is our target to sell. All right, crash 500. Consider crash 500. We don't need to analyze much on this because this one is very, very plain. Okay, it's very, very plain. Very, very, very plain. Very, very plain. Okay, so if you look at it, you see that structure is playing itself very well, and the market is willing to go up. So let's work on this actually, this particular area where you can see your counter trend line spotted out. Okay, and the market has broken it. So what do we expect? Corrective structure and another up. So that's what we're expecting now. So we can wait for this market to finish this corrective structure and another up. But if it did not finish its corrective structure and start to prove otherwise and break this high, you can enter it and put your stop loss below here or below here if you want to be safe. But if you don't want to take it or allow the market to form a corrective structure, remember our corrective structure, this is the first wave. So we see you see the second wave and see the third wave. So you need to see the third wave. This is the first wave. So the second wave has not finished forming. Second wave can move up, You can choose to do a running flat. You know what running flat is? This is running flat. Okay. You can choose to do something like this and it continue going. Just know the third wave. If you notice that this is the first wave, the second wave happened like this, and this is the third wave, just know that this is the area you will be expecting your market to move. So if you want to capture it, this third wave, go to 1 minute and see the structure there. Once you break the structure on 1 minute on this third wave, enter the market. The next impulse for this up is coming. Okay, so that is how you can monitor this. If the market give us a running flat, but the market can choose to give us a regular flat. Okay, it's not a must that it give us a running flat. Okay, but anytime market is on a speed, it can give us a running flat. So this can be impulse, can give us a regular flat pattern like this. Okay, this one is sharp and very nice. This regular flat pattern is always nice. So all you need to do is to draw your counter trend line. When the market break above it, you enter your buy and you start buying. Okay, so that is how we focus on this. Okay, but if you really, but remember this is stick. This is stick. Let's not get ourselves confused. This is tick. If you really don't want to trade ticks, you just option out. If you don't want to trade ticks, just option out. Okay. But if you really want to trade this, when you enter at this level, then you start going, or you allow it to do running flat. Anyone you do. Once the structure is complete, you can go up because the market is an up push. So after this up, we'll be looking for the down. Okay. We'll be looking for it. So currently, we are not having a bias on selling right now. Okay, we are not having a bias on selling right now. So we allow the market, even though it's on the zone, we allow the market to do what it can do because this an up push. Okay, for crash 500, then crash 1000. It has established a down movement. Okay, so and this kind of structure is a structure that will be playing with you like this, shoppy like this. And the market will keep going down. Okay. So seeing this market from 4 hours, let's see how it looks on 4 hours. So on 4 hours, it shows us some obvious move. Okay. Let me zoom well. This 4 hours. Okay. So it shows a corrective structure here and another down. Okay. So this is corrective structure down. So what are we expecting? It's possible for the market to push up again before going more down, or the market to continue to go down, then reverse up full time. Okay, so we have different ideology here for this engulfing candle. That is where the market keep on going. So we'll look at it from the 15 minutes and see the structure that can help us to target upward. But if not, downward is still our expectation. So this is my opinion. Okay, if this thing should be a corrective structure, this is one wave. Okay, so that should be down. After this down, if this market push up again, that should be a running flat structure. So I'm not expecting it to break this high. So if the market continues coming up like this, that should be a running flat forming. So that should be the third wave. So what I will do is that I will look at this wave now and look for the counter trend line. I mean engulfing candle, not counter trend line, engulfing candle here. That will give me that spot. I saw one on 15 minutes here that looks sharp, but I don't know if the market will be patient enough to get to that level. So let me look for more. Let me put it on 30 minutes to find an engulfing candle, let's say somewhere here. Okay, now you see that I have been able to spot the hidden one somewhere here from 30 minutes candle. So this now will guide me to see if this market comes here and I'm expecting a spike. I'm expecting a spike to reverse. And this, if that spike is strong, it will go more down, making this a running flat for another down. So on crash 1000, our expectation is here and here. Okay, if it didn't spike here, it will spike here. That is our expectation on crash 1000. Okay. All right. So boom 300. Obviously, we can see that boom 300 is an up push, even on 4 hours or daily time frame. So let's establish the fact from 4 hours. Looking at the 4 hours, you see that it is established that this is an uptrend, but this is corrective structure, though, if you look from where the market starts pushing down. Okay, so I will be targeting a reversal, full-time reversal. In fact, a very powerful reversal somewhere here, because on this place there is a on a daily time frame there is a very strong zone on daily time frame at this level. So this height might be the next area where this market needs to protest. So the market is coming to this reversal area, and by that it will clear this high. All this high now must have been then cleared. So more up could be expected. Okay, even though it gives a corrective structure, more up could be expected. But let's trade the 15 minutes first. So on the 15 minutes, we saw the market pushing up. He did a corrective structure here. We thought it's going to go more down, but he agreed to push up from all this running flat structure. Then he started pushing up. Now the market has did down. What I'm talking about is the small one that I'm seeing here. Obviously, it's a risk, but it's something that we can take. So if this market decided to push up again, we might be seeing another high up before the market will decide to come down. Because what we are seeing here is what is the first wave. Okay, we are seeing the first wave. So this should be the second wave, but it's doing some sharpy move here. So obviously it might push up again, then come down. So after that up, it can come down. When it's come down, it can correct here. There's an engulfing candle here, and the market is supposed to respect, okay, this zone. So if you respect this zone, then fine, it can continue up. But if you didn't respect this zone, the next zone you need to come and respect is this zone. This zone. So we have to be very, very careful on this our trade. If you want to trade this high, if you enter it here, just put your stop loss below this zone so that you trade the high. Because if you did not go this up and finally find yourself down here, you can equally enter here because you need to go that up to clear that, then come down. So if we see this structure, but we see that this is impulse, first impulse, corrective structure, and second impulse. If this thing happens, this is what we call expanding flat pattern. If it happens like this, it becomes expanding flat pattern. But if it did not happen like this, if it happen to respect here, it becomes a running flat. Once a running flat, then the next up will go. So be very, very careful. Either you enter here, just stop loss below here, or you wait for it to come down here, then you enter it to go up, or you allow it to go this up, then come down and enter it at this place. If you mix it here, then you capture it there. None of them we're expecting another high. Any of them that comes, we're expecting another high to come out. So that high should be very, very big. Should be very, very big. Either from here or it will come from here. Okay, that high. This high is not what we're expecting. This one is what we're expecting. So if you want to take this one, fine, take it, put your trade now here, put your stop loss here. Then once you get above this area, you get out. Okay. But if not, you can allow it to come here, you enter here, put your stop loss below and ride it up. Once you are done with it, to get out because it's going to come down again. If you come down again, if it tests this place now before going up, next time it's not going to use this place. Obviously, it's going to use here to push that up. Okay, that is for boom 300. For boom 300. So that time is going against us. So let's quickly check the boom 500. Okay, so on boom 500, it has played a good role for us, seeing that this market broke a counter trend line structure. Okay, on this area, and see what the market placed out. So now what are we expecting to see from the market? The market obviously has broken this particular one too downward. So what are we expecting? We're expecting a corrective structure, 3 waves to form here. So it's already on the first wave. So we can wait for it to give us 3-wave structure so that we know our next target, whether it's going up or it's going down. But from 4 hours, we can see all this shopping move to see what this market is actually doing. This is the 4-hour structure. This is how it looks like. So obviously, if the market decides to go down, it can go down. If it decides to go up, it can go last up before going down. Okay. So we have to be careful at the junction where the market is because it has broken the 2-sided structure. If you look at it, it started from here. You'll see how it started. Okay. See, it started moving like this structure, break this one, and form another corrective structure, break, from another one, break. So if this market wants to go up, it will give us just little corrective structure here and push up again. But this is the first wave. So we're not going to trade the second wave because it might not go that up enough. So we'll wait for it to give us after second wave come down, then we'll target the up. Or you want to trade the wave down, but it's not good for you to tick here. So let's allow this to form a structure before we trade. Okay. Then boom 1,000. Boom 1,000. We can say that the market is consolidating. Okay. More up is expected. If you break this high, we'll start going down. So, but that up have started. So we'll now be able to allow this to go up. But our main trade is this crash 300, crash 500, crash 1,000, and boom 300. Let's monitor them. Even boom 500 can still form. Okay. So that is all for our analysis this morning. If you have any question, you can drop it on our Telegram group. Okay, so that if we need to do another video, we can be able to do another video. Is that clear by everyone?
Yes, sir.
All right. I greet you, Mr. Joseph.